What if this recent silver drop wasn't the end of the rally, but the reset before the next explosive move? What if the sharp pullback that shook out weak hands is actually setting the stage for a rebound that could push silver back toward $80 and possibly beyond? Most traders are focused on the fear. Smart money is focused on positioning. And today we're going to break down whether silver can truly reclaim those higher targets after this sudden fall, or if this is just the beginning of something deeper. Before we go further, if you follow silver closely and want real-time macro insights without the noise, make sure you hit like and subscribe right now. On Silver Shockwave, we don't chase hype, we follow structure, liquidity, and where big capital is moving. That's what separates emotional reactions from smart positioning. Now let's talk about what just happened. Silver didn't just drift lower, it dropped fast. The kind of move that triggers stop losses, margin calls, and panic selling. When price falls sharply after a strong rally, it feels like momentum has completely flipped. Social media turns bearish overnight. Headlines get dramatic. But here's the important question. Did the long-term structure actually break, or did silver simply retrace within a larger bullish trend? To answer that, we have to zoom out. Silver has a history of violent pullbacks, even during strong bull cycles. We've seen 15%, even 20% corrections before continuation moves. The metal is thinner than gold, it moves faster, it overreacts both ways. So when we see a sharp drop, we need to look at key levels instead of emotions. Right now, the critical focus is whether silver can reclaim major resistance levels that were lost during the drop. Markets often retest breakdown zones. If price can climb back above those key levels and hold, that tells us the selling pressure was temporary. But if price keeps failing at lower highs, that signals deeper weakness. The talk about $80 might sound aggressive, but remember, in inflation-adjusted terms, silver has traded near those levels before. The question isn't whether it's possible. The real question is timing and structure. Let's look at the macro backdrop. The US dollar has shown signs of instability. Even small cracks in the dollar can have amplified effects on silver because of its dual role as both a monetary and industrial metal. If the dollar weakens further, it provides a natural tailwind. But if the dollar regains strength, silver may struggle to sustain a rebound. Then there's interest rates. Silver reacts strongly to real yields. If inflation stays sticky while the Federal Reserve signals caution, real yields can compress. That environment historically supports precious metals. On the other hand, if bond yields push higher and inflation expectations cool, silver could face headwinds. Now let's talk about something most retail traders ignore: positioning. Large funds often accumulate during fear. Sharp drops create liquidity. Weak hands exit, strong hands absorb. If open interest stabilizes and volume spikes during a rebound, that's often an early sign of accumulation rather than distribution. The first bounce after a big drop is usually technical. The second bounce tells you whether real buyers are stepping in. Another factor that keeps the $80 conversation alive is industrial demand. Silver isn't just a store of value, it's critical in solar panels, electronics, EV infrastructure, and emerging green technologies. If global manufacturing stabilizes or rebounds, that demand floor strengthens. And when investment demand returns on top of industrial demand, supply can tighten quickly. But we have to stay realistic. After a sharp fall, markets rarely go straight up. They consolidate, they retest, they shake out both bulls and bears. That means volatility is likely to remain high. Traders looking for a straight line to 80 may get frustrated. The path, if it happens, will likely be choppy. Here's the technical angle in simple terms. If silver can reclaim the breakdown zone and flip it into support, momentum shifts back to the upside. Higher highs and higher lows would reappear on the chart. That's when trend followers step back in. If, however, silver rallies into resistance and stalls repeatedly, forming lower highs, that increases the probability of a deeper correction. This is why patience matters. Many people try to predict the exact bottom. Smart money waits for confirmation. Confirmation doesn't mean buying the lowest tick. It means buying strength after structure improves. That shift alone can dramatically improve risk management. Let's address psychology for a moment. When silver was rallying hard, everyone was confident. Targets were getting higher by the week. Now after the drop, the same voices are quiet or bearish. That emotional swing is normal in volatile assets. But markets reward discipline, not emotion. If you believe in the long-term bullish case, currency debasement, rising debt, geopolitical tension, industrial expansion, then pullbacks can represent opportunity. If you believe liquidity is tightening and economic slowdown will crush demand, then rallies may be selling opportunities. Both views exist, the chart will eventually decide. The $80 level isn't just a random number. Round numbers attract attention. They become magnets when momentum builds. If silver starts reclaiming prior highs and breaks through major resistance clusters, algorithms and breakout traders can amplify the move. That's how metals accelerate, not slowly, but suddenly. However, for that to happen, we need certain conditions. We need the dollar to stay soft or weaken further. We need real yields to stabilize or decline. We need industrial demand to remain resilient. And we need investment flows to return to ETFs and futures markets. When these elements align, silver doesn't drift, it surges. But here's the warning. If silver fails to reclaim key levels over the next several weeks and instead forms a consolidation below prior resistance, that could signal a longer cooling period. Not necessarily a crash, but a digestion phase. Markets sometimes need time to reset sentiment before the next leg. For long-term holders, volatility is part of the journey. For short-term traders, structure is everything. The key right now is watching how silver behaves on rebounds. Are buyers aggressive? Is volume expanding on green days? Are pullbacks shallow? Those are subtle clues that matter. Let's also consider supply constraints. Silver mining output hasn't expanded aggressively in recent years. Environmental regulations, capital costs, and geopolitical instability in key mining regions create uncertainty. If investment demand spikes while supply growth stays limited, price pressure builds quickly. At the same time, we cannot ignore global liquidity cycles. When central banks ease, metals tend to respond positively. When liquidity tightens, risk assets and commodities often struggle. So keep an eye on global policy signals. Silver is sensitive to shifts in capital flows. So can silver rebound toward 80 and reclaim higher targets after this drop? Yes, it can, but it must prove itself. It must reclaim structure. It must attract volume. It must hold support on retests. A single strong green candle isn't enough. Sustained higher lows are what rebuild confidence. And here's something many overlook. Markets move when the majority least expect it. If sentiment becomes too bearish while fundamentals quietly improve, that imbalance can fuel powerful upside moves. Pain creates opportunity, but only for those prepared. On Silver Shockwave, our focus is not predicting headlines. It's reading the flow beneath them. The recent drop created fear, but fear also creates setups. Whether this becomes a launch pad toward 80 or a pause before deeper correction will depend on how silver behaves at these critical levels. Now I want to hear from you. Do you think this drop was a healthy reset before the next breakout or the start of a larger downtrend? Drop your view in the comments. Your perspective helps build smarter discussions in this community. If you found value in this breakdown, share this video with someone who follows silver but might be reacting emotionally right now. And if you haven't already, subscribe to Silver Shockwave so you don't miss the next update. Because in markets like this, timing and awareness make all the difference. Silver doesn't move quietly for long. The question is not whether volatility will return, it's in which direction. And the next few weeks could decide whether $80 becomes a realistic target again or remains just out of reach. Stay sharp, stay patient, and I'll see you in the next one.